So students, shall we start? Say around.
Yes, ma'am.
Okay, fine. Okay. So previously we were just doing chapter your study note number 8, where we have studied about the ITC claims, setting of ITC against the liability, the rules, exactly the rules of setting of the ITC. So in this, there were two more points that were supposed to be covered, and those two are like payment on delayed interest on delayed payment of interest and refund of tax if there is any. Mm-mm. Okay, no problem. Okay, so starting with, hope you're able to see the screen or having your study notes. We are on page number 394 of your book. Okay. Mm, okay. Okay, so to start with, what are the situation where the interest is paid? As the heading itself states that the provision of interest become applicable when there is a delayed payment of tax. Okay, Siley, it is 312. I'm not carrying the old book. So, okay, fine. So, whenever there is a delayed payment of tax, as we all know, once an outward supply is being made by the registered dealer, that registered dealer is collecting the tax on behalf of the government and is liable to deposit that tax to the government by the 20th of the succeeding month, immediately the next month. So if that tax is not deposited by say 20th of the next month, then that registered dealer is liable to pay interest on the delayed payment. So under section 50 of the CGST Act 2017, it states about two scenarios when the interest is payable. When the interest is payable. So the first one, as we discussed, is the delayed payment of tax. That means the tax has been collected, say, in the month of October. We are sitting at the close of the October. What all supplies has been made till 31st October? What all tax has been collected on those will be deposited. Will be deposited to the government by 20th November or any amended date as declared by the government by way of notification. In this pandemic, government has been declaring the dates, they have extended the dates. So by so and so date, it should be deposited. Second scenario is when the input tax credit claim has been taken in excess, because as we take the input tax credit, that means setting off the ITC against the outward liability. As and when we set off the ITC, the outward liability gets reduced. So, say suppose we are supposed to deposit 100 rupees but claimed ITC of 20 rupees. So, what we deposited is 80 rupees. But later on, we come to know we have overclaimed the ITC. Actually, it was only rupees 10. So, 10 rupees that excess claimed, ITC excess claimed, that registered dealer is supposed to pay interest on that excess claimed ITC. So this is how the interest is payable under section 50 of CGST. Now the interest rates have been confirmed by notification number 13 of 2017, where it states that if there is any delay payment of tax, the rate of interest of 18% will be applicable, whereas if there is an excess claim of input tax credit, then that registered person is liable to pay interest of 24% per annum plus has to deposit that excess ITC claim. Like in the given example, I have taken 10 rupees 10 has been deducted in excess. So what I am supposed to deposit is rupees 10 plus the interest applicable at the rate of 24% from when it was payable on 20th November, say suppose. So the interest I have taken the excess credit. So this 10 rupees will be deposited back to the government, and interest will be on this 10 rupees will start from 21st November till the actual date of payment of this uh, ITC excess ITC claim. So till that period it will be the interest will be charged. So interest here we'll study in detail that interest uh, is not charged on monthly basis. It is for a period. Say in the current example from 21st November till the date of the actual payment. If we are making the actual payment we realize in the month of December, say 5th December. So interest will be payable from 21st November till 5th of December 2020. So we have not seen from the month perspective that for the entire month of November, then for the month of December. No, till the date of the actual payment to the department. So now they are saying that interest is subsection 1 of section 50 talks about the calculation of this interest penalty. Rates are given and it is calculated on day basis from the date when it becomes due till the date it is paid. Now they are talking about normally every tax liability and everything is paid through GST portal only. So in the law it has been stated that any payment made even after 8 p.m. is credited to the account of the registered dealer on the same date. That means it is not like when earlier it used to happen that check is given and it is subject to clearance, then what is the date when the tax has been deposited, and because there can be subject to clearance and it may take a day's time or 2 days time, and the date gets delayed because of that clearance issue. So they have just described in the stated in the law that even after the payments are made 8 p.m., say 20th November is the last date, and if the registered taxpayer is making payment even after 8 p.m. of the 20th November, it will be the due credit will be given to the taxpayer that yes, the tax has been deposited by the due date. So no interest will be uh, considered for that purpose. Now, in case of GST, payment of any tax fee liability, it is all done electronically. In case if there is the payment is 10,000 or less than 10,000, then the payment can be made by physical challan by way of cash, check or demand draft through an authorized bank. But if the payment is more than 10,000, no way it can be made on physical challan. It is mandatory to deposit digitally. Hope till now it is clear. Okay, Varun, thanks for confirming. And let's start. Thanks, Siley. Let's go to read example number 5. Okay, thank you, Rajesh. So let's quickly go through example number 5. Messrs. Rajendra Dyeing Private Limited supplied goods worth 10 lakhs to Messrs. Y Limited in the month of September plus GST 12%. That means 10 lakhs is the exclusive is the price of the supply of goods or services. Here it is goods. 12% GST should be charged over and above. Just keep an eye on the language written in the question. So be very clear whether it is inclusive or excluding of GST. So Messrs. Rajendra Dyeing Private Limited paid the GST on 5th December. So in which month the supplies happened? In the given question example, which month the supply has happened?
September.
It is September. When the tax is supposed to be deposited? Yes. When the tax is supposed to be deposited?
December.
No, by 20th October. By 20th October. When is the date of filing of the 3B? The date of filing the 3B, along with that, the tax liability is paid to the government is 20th of the next month, immediate subsequent month. So in this case, when the supplies happen in the month of September, the tax will be paid by 20th October. But in this example, when this Messrs. Rajendra Dyeing Private Limited paid, they paid on 5th December. Clear? Now, there is a delay in the payment of the tax. This is a case. Now, in this question, we will see how the tax liability, the interest is worked out. Now, the amount of input tax credit is 70,000 is available in the books. There is ITC sitting in the books 70,000. Calculation of interest payment, if any, under section 50 of the CGST Act 2010. Now, they are talking about interest payment, if any. So, you have to take Mute. Hello.
Yes, I'm audible.
Yeah, sorry. So sorry. The light just went off and got disconnected. ठीक हो गया. Hello students. हाँ फिर से डिस्कनेक्ट हो गया क्या? No, audible ma'am. Okay, thanks Varun for confirming. The net got disconnected in. So sorry for the inconvenience. Continuing with the example 5. Continuing with the example 5. So are you all able to so sorry. Screen share नहीं हुआ. Okay. Now I have just shared. Now is it visible? Yes. Thanks. Thanks, Ali. Thanks,
Yes, ma'am.
Harshita. Thanks, Varun, for confirming. Okay. So let's continue with the example number 5. Uh, so are you able to work out the number of days for which the interest is payable? Yes, Varun. Hope all you all are able to work out number of days. It is important to come to work out the correct figure for interest amount. So tax payable is 50,000 and interest thereon is based on 46. In your notes, it has been worked out for 411 days, which is incorrect. Mistakenly, it has been calculated for 411 days. So please correct it to 46 days and accordingly work out. It comes somewhere around 1134. Moving on to example number 6. Example 6. Mrs. Nose Limited reduced the amount of 2,25,000 from the output tax liability in contravention of the provisions of Section 40 to 10 of CGST Act 2017 in the month of January 2018. Invoice dated is 12th January 2018, which is ineligible credit at invoice level. So, what has happened? There was an invoice in January dated 12th January, but there was an ineligible credit that has been taken against this invoice. The amount of that ineligible credit is 2,25,000. So from this entire statement, we concludes that some excess credit has been taken, amounting to 2,25,000. As a result, a show cause notice issued by Central Tax Department under Section 74 of the CGST Act. Section 73 and 74 of the CGST Act relates to the demands raised by the government, the GST department. So raised along with the interest. Mrs. Nose Limited paid the tax and interest on 5th March 2018. Find the interest liability if any. So invoice was related to January. When the excess was claimed, it is in the month of January. So when it was supposed to be paid, it was supposed to be paid by 20th February. So these are the few information which is implied, we can interpret, infer from the details or information given in the question. Okay, so seeing the dates, accordingly compute the dates, calculate. Yes, when it was due to be payable on 20th February but paid on 5th March, yes, there is a liability towards interest. Then compute the amount of interest. The tax amount is given, the excess credit taken is 2,25,000. So what this Nose Limited has to repay? They have to pay 2,25,000 plus interest on that. So the applicable interest rate will be in this case 18% or 24%. And why? 18% or 24%?
24%.
24%. Why? Why? Ineligible ITC. Correct, Varun. Okay. So it is the ineligible. We have claimed ITC in excess. Whenever in excess anything is claimed, rate of interest is 24%. So again, now we know what is the amount that has been excess claimed. You know the rate of interest. You know the number of days. Just calculate the amount of interest. Here the number of days are correct. See, the 20th February was the date. So from 21st to 28th of February, there are 8 days plus 5 days. So 8 plus 5, 13. So correctly, the interest amount has been worked out over here in the solution. Hope it is clear till now. Okay, Siley. Now they have just given an interpretations from the decided case laws. Just memorize these case laws. If any case study comes similar to the decisions taken under the case laws, just refer the case laws. So in G1 Diesels versus and Electricals Limited versus Commissioner of Central Excise Pondicherry, it was concluded that interest under Section 50 of the CGST Act should be computed in accordance with interest rate in force during the period of delay. Now suppose in the just example above, example 6, what was the period for which the interest was paid? It is from 21st February 2018 to 5th March 2018. The rates what we are have studied were declared by notification somewhere in June 2017. Suppose there is a change in the rate of interest. From 1st February, the rate of interest got changed from 24% to say 20%, reduced to 20% or increased to 25%. So you are liable to pay the interest for the period from 21st February to 5th March. So the applicable rate of interest will be the new change rate. So you have to check for which period you are paying the interest. Is there any change in the rate of interest that is applicable for the current period? Then apply that change rate of interest. Otherwise, if there is no changes, no notification, same is prevailing, charge at the rate of 24%. Hope it is clear. Okay, thanks, Varun. Thank you. Next point is interest payable for actual period of delay, not for whole month. This we have discussed. The case you can refer is BPL Mobile versus CCE. Again, Commissioner of Central Excise, CCE means. Now, interest is payable even if duty is paid before issue of show cause notice. It is not that law never states that interest is only payable when a registered dealer receives show cause notice from the department. It is very clearly stated in law that if there is any delay in the payment, the registered dealer has to pay the interest. So one should not wait for the show cause notices raised by the department. They themselves should take the initiative and deposit the interest amount as well. In both the scenarios, delayed payment of tax or excess claim of ITC. Okay, now interest provision. It is not only from the uh, from the side of the taxable person, it is also from the side of the department. Department is also liable to pay interest in certain scenarios. What can be the scenario? Definitely, if excess tax has been deposited by the registered dealer, or if ITC is remain unclaimed in the books, they are eligible to take the refund from the department. So for that purpose, a taxable person has to make an application for refund to the department in the prescribed forms. Then, if the refund, if if from the government point of view also refund is there, like the registered dealer is eligible to get the refund, then a certain timeline is defined. Government is also liable to pay that refund within that defined timeline. If not, then the government is liable to pay the interest on that amount that is due for refund. So what all scenarios are there? We will just study those. Three scenarios are being stated. That is subsection 12 of section 54 and section 56 of the CGST Act deals with the refund provisions. So first point covers that refund of tax has been withheld from a person on account of an appeal or proceeding, but which is later found to be eligible to be paid. There was certain refund. The registered dealer has made an application for refund, but since certain proceedings or appeals are going on, that government is saying that no refund is being eligible, but later on the case is decided in favor of the registered dealer only, then the government is liable to make the refund to the dealer. Then in that case, the interest is payable by the department. The rate of interest payable by the departments are definitely are on lower side as compared to what they are charging from the registered dealer. So section 56 states that refund of tax has not been given to a person within 60 days from the date of receipt of application for refund. So when the interest is payable, if what is the timeline for refund defined under law for refund of the excess money, it is 60 days from the date of receipt of application. So within 60 days the government has to make the refund. If anything goes beyond 60 days from the date of the application made by the registered dealer, then the government is liable to make the interest. Now the third point is refund order of an by an executing authority or appellant tribunal or court has not been paid to the person within 60 days. If the refund order has been passed, and even then it has not been paid within 60 days from the date of the application for refund, then the government is liable to pay the interest on that. Now the rate of interest is, for the first 2 points defined under law, it is 6%, and for the third point where the orders has been passed by the government and still the refund has not been made, the rate of interest applicable is 9%. Further, subsection 14 of section 54 states that no refund shall be granted if refund amount is less than 1,000. So if it is less than 1,000, they are not liable to pay. Whether online or like anything, it will not be paid. Hope it is clear. The law is clear to you, and let's move to example 7.
Yes, ma'am.
Okay, thanks for confirming. Now, example 7, X Limited manufactured and cleared taxable goods on 1st August 2017. Value of the goods was 20 lakhs plus GST at the rate of 12%. After payment of GST on or before the due date. After payment of GST on or before the due date, that means GST has been paid on or before the due date, it is noticed that these goods are exempted from GST. That means the goods the manufacturer was dealing into or the final product was exempted from GST and applied for want of refund of GST on 15th November. So the supplies happened on 1st August. He paid the tax by September, and but realized of late and made an application of refund on 15th. Department acknowledged the receipt on 15th December 2017. Department granted the refund. That means the department has passed the order. Granted the refund on 23rd January 2018. So when the government has granted the refund order, it is 23rd January. So the relevant date is, when is the application made by the X Limited? It is 15th November, clear? And when the orders has been passed by the government, it is 23rd January. So yes, the government is supposed to make this refund within 60 days. So when the 60 days are completed, considering 15th November as the date of application for refund, it will come to from 15th November to 15th December, then to uh, 15th January. Since two of the months are of 31 days, so that is why it comes to 13th January. So the number of days, 60 days gets completed by 13th January, but actual date of payment is 23rd. So we will count till 22nd. So government is liable to pay interest for 9 days. So we will just work out for 9 days at the rate of 6%. Hope it is clear. Okay. Thank you, Varun.
Yes, ma'am.
Now, another case law. The facts of the case was whether the interest on delayed refund under Section 56 of the CGST would be payable from the date of deposit of duty or after expiry of 60 days from the date of receipt of application for refund. Sorry. So what situations they are covering is it from the date of deposit of duty? Like in the above example, the when the transaction happened, It happened in the month of August. Duty was deposited when it was deposited. When it was deposited, on or before due date. So what is the due date? Let's presume due date. Considering August, what is the due date by which the tax has been deposited? September 20th. Correct, Rajesh. So what they are asking is, should they consider from the date of deposit of the duty? Is government liable to consider the days of 60 days from the date of duty deposited? They are saying no. It is always the date of the application of refund deposited by the registered dealer who is claiming the refund. Hope it is clear. So we will never count 60 days from the date of deposit of the duty. Second scenario, what they are considering is, or after expiry of 60 days from the date of receipt of application for refund. Yes, second scenario is correct. Yes, the interest will be paid after 60 days gets over from the date of the receipt of the application for. Hope it is clear to all.
Yes, ma'am.
Okay, thanks for confirming to all of you. Now, case law number 3, Rinvaxi Laboratories Limited versus URI. Facts of the case were whether the interest on delayed refund under Section 56 of CGST Act would be payable from the date on which order of refund is made by the judiciary or after expiry of 60 days from the date of the receipt of application for refund. Again, irrespective of the order of the judiciary, always 60 days period is counted from the date of receipt of application. Hope it is clear. So in all the scenarios,
Clear.
it is from the date of the application for refund. Now, till now we have just studied ki yes, taxable person is eligible to get the refund. The scenarios in which he is eligible to get the refund, the time period the government is supposed to make the refund. If not made within that due date, government is liable to pay interest. Now we will see that what is the time period within which a registered dealer can make an application for refund. That is also very crucial to claim the refund. If we just cross that limit, if your application is time barred, considering the provisions of the law, then that application for refund will not be entertained and you will not get refund from the department. So let's go through the provisions. So subsection 1 of section 54 of the CGST Act deals with this uh, time frame for making the application for refund. So what it states is that any person claiming refund of any tax or interest, you are a registered dealer, is not only eligible to take the refund of tax but also eligible to take the refund of interest, clearly stated under subsection 1 of 54. If any paid on such tax or any other amount paid by him may make an application before the expiry of 2 years from the relevant date in such form and manner as may be prescribed. So the form and manner is prescribed in the law. The time limit is also prescribed in the law, that is before the expiry of 2 years from the relevant date. Now, a person is required to understand the meaning of this relevant date because the law is talking about before the expiry of 2 years from the relevant date. Now, subsection 2 of 54 gives the meaning of relevant date. A point states, 1. In case of exported goods out of India, definitely exports means you are exporting goods out of India. What can be the date? What can be the relevant date? Because what you are doing in case of exports, when the refund is applicable in case of exports, when the refund is applicable in case of exports, can anyone share? Can anyone can just share the understanding? Is a taxable person liable to pay GST? on exports? Okay, so GST is the law of land, is applicable to the territorial boundaries or the uh, India only. Exports is happening within the boundary of India only. So any person who is making the export is liable to pay the GST. But at the same time, the person who is charging, like uh, charging, okay, fine, charging GST on the export value is liable to get refund on that. Or if by the taxable person LOU, there's an understanding that is being signed between the custom departments and the taxable person. If that document has been signed, then they are not liable to charge GST. They have to just raise the invoice without charging the GST. So there will be no questioning of charging and taking refund. But in case if there is any refund eligible related to the goods exported or any inputs that has been used, that means the ITC available on the goods that has been exported, if a taxable person is liable to get refund, then what will be the time limit? It is again 2 years before 2 years from the relevant date. Now the understanding of relevant date. The relevant date means if the goods are exported by sea or air, the date on which the ship or the aircraft in which such goods are loaded leaves India. So what is the relevant date? It is the date when the vessel or aircraft leaves India. If the goods are exported by land, then that means the goods passes the frontiers, the it passes the borders. If the goods are exported by post, then the date of dispatch of goods by the post office concerned to the place outside. Okay, so these are the relevant dates. So whenever the goods has been vessel has started, that is the relevant date. So before the expiry of 2 years from the relevant date. Suppose the vessel has left today, that is 28th October 2020. So the application for refund related to this shipment can be made till 27th October 2022. Is it clear? In case of exports, the cases can
Yes,
be
ma'am.
referred, the law can be referred. Okay. Now, point B. In case of supply of the goods regarded as deemed exports, where a refund of tax paid is available in respect of goods, the date on which return related to such deemed exports is furnished. Okay. In case of deemed exports, the returns related to such deemed export is furnished. That date on which the date has been return has been furnished will be the relevant date. In case of the services exported out of India, where the refund of tax paid is available in respect of services, or as the case may be, the input services used in such services, the date of receipt of payment in convertible foreign exchange. The above A point was related to the goods, C point relates to the services that are exported. Now what is the relevant date understanding is receipt of payment in convertible foreign exchange. That means you are getting your FCNR or NRE account, you are getting the payment from the foreign party where the supply of services has been completed prior to the receipt of such payment. That means services is already completed. See, just an example, services got completed by 15th and today I am receiving the payment against those services exported. So today is the date considered as the relevant date for claiming the refund. B point, issue of invoice where payment of the services has been received in advance. If in case the payments has already been received in advance, so the date when the invoice has been raised. Hope you have studied the provisions related to raising of the invoice. It's only we have started like what is the time limit for raising the invoice. For services it was 30 days and NBFC 45 days from the date of supply of services. That is a maximum time frame you can raise the invoice. Okay, D point is in case where the tax becomes refundable as a consequence of judgment, decree, order or direction of the appellant authority, appellant tribunal or any court, then the date of communication of such judgment. You have applied for refund. Okay, so means when you can apply, we are studying that it should be 2 years before the relevant, within 2 years from the relevant date. So in case refund a registered dealer becomes eligible for the refund basis the order passed, then that date of order will be the relevant date. In case of refund of unutilized input tax credit, the end of the financial year. Suppose 2020 is the financial year. 31st March, the financial year gets closed on 31st March 2020. If there is any eligible refund related to ITC, a person can apply till 31st March 2022. Hope it is clear. F point states, in the case where tax
Clear.
is paid, okay, thank you. Tax is paid provisionally under this act or the rules made thereunder, the date of adjustment of tax after the final assessment thereof. Means provisionally means you are making setting of the taxes, and because of that there's some refund raise in the books, then the date of adjustment of the tax, once the assessment is done, you have adjusted the tax, then the date of that adjustment becomes the relevant date. In case of a person other than the supplier, the date of receipt of the goods or services or both by such person. Means in any other case, the person who is receiving those goods and suppliers, he want to claim the refund of the tax paid by him, then the date of receipt of such goods or services. In any other case where your case is not falling in any of the points covered from A to G, then the date of payment of tax will be considered as the relevant date. From that date till 2 years, you can file the application for refund. Hope it is clear.
Yes.
Any doubts? So with this, your note number 8 gets complete, where we just studied the rules of ITC, work out the interest in case of delayed payment of the tax or excess claim of ITC, and when the refund application is being made by the registered person, or if any person who has received the services or goods. So shall we in continuity start with the study note number 9, or you need
Yes,
a break
ma'am.
of 5 minutes? Shall we start?
Yes.
Okay. Okay. So in this study note 9, we are going to study about the provisions related to TDS and TCS under GST. We are going to study the scenarios and the person who are liable under GST to deduct the TDS and TCS. So as we all know, TDS means tax deduction at source, TCS means tax collected at source. Source means what? What is the understanding of source? Source means the point of generation of income. Hope you all have studied the TDS provisions under income tax. Okay, so like I have taken, you are owing some property, residential, I have taken it on rent. Okay, residential नहीं लेते हैं, commercial लेते हैं. Sorry, residential का फिर limits वगैरह आ जाएगा. You are owing a commercial property. I have taken that property on rent from you. So the rent is say somewhere around 1 lakh per month. So it is crossing the threshold limit. So what is the source of the income? It is an income for you. I am using the property. I will pay. It is my expense, but is income for the property holder, that is you, the owner of the property. So when that income is generating, as in when I have utilized the services of that rental accommodation. So as in month ends, that is the 30 or the last day of the month, that income gets generated. So from this is the point, the person who is using those services is the point where that income is generated. So I am liable to deduct the TDS and pay it to you. These are the provisions related to the income tax, but the TDS part is same, but nowhere it is related to TDS, that of the TDS deducted or the laws defined under the income tax. We will just refer the law defined under the GST. I have just explained what is TDS, tax deduction and source. I have just explained that. Hope it is clear. Okay, TDS, the understanding of TDS. Now, Section 51 of the CGST Act covers the provisions related to tax reduction at source. This is a very good depiction in a flowchart manner in the notes they have given. So, TDS under Section 51 is deducted only when the contract value is more than 2.5 lakhs. Okay. Normally, TDS under GST is deducted by central, state governments or the establishments defined by the central and state governments that we are going to study just below this flow chart. The law has defined under subsection 1 of section 51 all the parties that are eligible to deduct the TDS. It is the government, they are claiming so many services. So all those services are being taken from the registered dealers who are doing the business in the private capacity, not under the statutory, like they are not having the statutory holdings. Mm. So they are doing the business in their private capacity, the private limited organizations. So when such organizations or government agencies are doing any contract with such people, and if the contract value is more than 2.5 lakh, then such government agencies are liable to deduct TDS under section 51 of CGST. So what is the checkpoint? Yes, the contract value is more than 2.5 lakhs. If yes, then what the next thing we have to check is whether recipient is DDO. DDO means these agencies only that are defined under subsection 1 of section 51. All these agencies, you will see that the above category of person, just see my cursor, the above category of person also called as drawing and disbursement officers, okay, who are required to deduct the tax in accordance with the provisions of the GST law. So if the person who has entered into a contract receiving the services is DDO, if it is not, then no TDS. If it is yes, then what we have to see next? DDO belongs to the supplier state. That means it should be intrastate supply. Got it? It should be intrastate supply. If it is not in the same state, then no. If it is yes, then the rate of the TDS has been defined under the law. No, again, DDO and place of supply is in the same state. If the DDO and the place of supply, I hope you have studied bill to and ship to concept. Okay, billing address is different and shipping address is different. So DDO and place of supply is in the same state. If it is not, then no TDS. If it is yes in the same state, then again a TDS is deducted by the DDOs. DDOs means all the agencies notified under the Act who are the recipient of services. Okay, so what is the rate of the TDS? The rate of TDS is 2%. As we are talking from this flow chart, you can understand the TDS is only deductible when there is an intrastate transaction. So 2% of CGST, 2% of TDS is deducted. Shankar, since when it is not clear, shall I repeat? Is it clear now? Is it clear now? The voice, are you all able to hear? It is clear for us.
Continue.
Okay, to others, please confirm. Then, Shankar, there must be some problem at your end. Just reconnect your net or just check it once. Shankar, voice not clear. Again, you are saying, Shankar, restart your system, reconnect your internet. At times it happens in between the classes. Shall I start? Shankar, are you able to hear? Shankar, please confirm. So I don't know when Shankar will connect. We'll just repeat, and let's start and continuing the class. Okay, otherwise we'll run short of time. So 2% TDS is deducted at the rate of 2%, 1% on account of CGST, 1% on account of SGST. So first we will just study subsection 10 of section 51, understanding the type of supplies. Then it will be easy to understand the law, what other provisions written in the law. So subsection 10 of 50, subsection 10, or is just the point number 10? The above person referred to 51 TTS shall come into force. So these are general points, not the subsections. Sorry. So point number 10, there is an illustrative list of various supplies on which TDS may or may not be required to be deducted. So one thing should be very clear. First thing is, we should understand that the goods that has been supplied to these agencies, DDOs, is a taxable supplies as per the GST law. If it is an exempted supply, no TDS will be deducted since no GST is chargeable. So what can be the type of supplies? Supply in GST covers both supply of goods as well as supply of services by vendors, suppliers to government department, to local authorities and other recipients defined as DDO under this section 51. So what are the examples of supply of goods or services? It can be procurement. Procurement, who is going to procure? It is the DDOs. It is the government authorities, local authority who are going to procure these services or goods. That is stationary item, toiletry articles, towels. To run any organization, you need such articles. Air conditions, machines, electrical goods, books and periodicals, medicines, food, beverages for employees or other stakeholders, computers, printers, books. See, books in this GST books is an exempted item, so still they are just writing books. uh, Procurement of security services, car rental services, generator rental services, consultant services, legal services, rental services for office building, rent, maintenance services, rental of machineries, work contract services such as road, bridges, buildings. Government is hiring now, like roads are being developed, highways are being developed. So government is hiring. They are taking services. They are giving contract to outside parties. So work contract services. So any kind of services that is being taken by such DDOs, if the contract value is greater than 2.5 lakh, then DDOs are liable to deduct the TDS. Now, the parties who are supplying these services are eligible to take the input credit of that TDS that has been charged by the or deducted by the government. Hope you are all able to understand the transaction. See, you are the private supplier of, say, stationery. There's a government department. Government department enters into a contract with you to supply of the stationery for the complete year, or it can be for a month. The consumption is so high that the contract value is more than 2 lakh 15, not equal to, more than 2 lakh 50,000. Then, when the government is releasing the payment to you, they will deduct TDS at the rate of 2%. Then they will make the payment, and that 2% is deducted only on the accessible value of the invoice. You are supplying the material, you will be raising the invoice. So what you are going to mention in the invoice? Stationery supplied. I'm not just taking the in items. Stationery supplied, it is for 3 lakh. There is a GST applicable, say at the rate of 12% for 3 lakh. 12 is 36, so 36,000 will be the GST. But government is going to deduct TDS of 2% only on 3 lakhs, not on the total invoice amount. Hope it is clear. Hope this point is clear to you. Okay, Varun, thank you. Okay, so these are the few common things, critical things that I have just explained to you to understand this thing. We will later on study few more examples, different scenarios, so the things will get absolutely clear to all of you. So who all are covered under DDOs? It is um, the central state government, and such mandating shall be for the following persons, means refers to the TDS related mandating means it is mandatory to deduct the TDS under subsection 1 of 51, and they are mandating to whom? To the central and state government and the agencies given under from A to D point. That is department or establishment of central government or state government, local authority, government agencies, or at the recommendation of the council, the central or state, by way of notification, includes any of the following person under subsection 1 of section 51 will be liable to deduct the TDS. They can be any authority or board or any other body set up by any act or parliament or state legislature establishment by any government with 51% of more participation by way of equity or control to carry out their functions. When we say that Harshita, acha, Shankar is there. Harshita, now is it clear? Shankar and Harshita, both of you please
नो
confirm.
मैम वॉइस बीच में ब्रेक हो रही है.
Okay, Harshita, I don't know what are the reasons now to it is not on Wi-Fi also. Hotspot से connect किया हुआ है because Wi-Fi at times just when the light goes, Wi-Fi disconnects. In my case, it is very clear. Okay, Varun. Harshita, you please tell Shankar if you have joined back. Request to please reconnect because if the few of you are getting voice clear, that means it is the problem is at your end. Please reconnect. So please quickly remaining who all are there, please go through point number B, C. Then I'll just explain the how an organization become a government organization. Please quickly go through these 3-4 lines. Harshita, are you back? So Varun and I hope others are there. So I'm just continuing. I don't know how much time they will take to reconnect. So shall I continue? Varun and others. Okay, Harshita, thanks for coming back. Okay, hope now I'm clearly audible to you. So
मैम
okay. So the central government at times by notification they approve certain bodies that or they are created by the act of parliament or state legislature established by the government. Normally when government is holding 51% either of equity or having the control over decision making of the functions or the decision making policy making decisions when the government is having control to the extent of 51%, then such bodies are covered under the government agencies and are liable to deduct the TDS as per subsection 1 of 51 under GST, CGST Act 2017, or any sort of public sector undertaking or any society registered by the central government or the state government or the local authority under the Society Registrations Act. Hope you have no aware of the Society Registration Act. So post audit authorities, there is an exemption to the post audit authorities under Ministry of Defense are exempted from this TDS compliance by notification of 57/2018. This is the only one that are exempted. So they have covered even the supply of goods or services from one PSU to another PSU, whether a distinct person or not, is exempted from TDS provisions by notification. Sorry, they are also exempted. Like PSU to PSU, if there is any contract, whether they are distinct person or not. But if there is a contract between PSU to PSU, they are also exempted from the provisions of the TDS. Yes, government is exempted. When you're dealing with the private people for procuring anything, then the TDS provisions are applicable. So the post audit authorities and PSU to PSU transaction is exempted from the TDS provisions under section 50. So they have just given explanation. Acha, when this section 51 came into existence, it became from 1st October 2018. Prior to that, whatever is the contract happened between the government and the private parties, those are no TDS provisions were there, so no deductions will happen. But after first 1/10/2018, this section 51 will become applicable, and TDS is supposed to be deducted. So the above persons are referred to as deducted. As you all know, who is deducting the TDS will always called deductor. So in this scenario, DDOs will be the deductors. What rate they are deducting? At the rate of 2%. Again, they are just explaining those things only, that the limit should be more than 2.5 lakhs, the contract value. If there are multiple contracts, every contract which is having value greater than 2.5 lakh, only on those contracts the TDS will be deducted. If the contract is equal to or less than 2.5, no TDS will be deducted. So the amount deducted, I'm not completely reading point number 2, I've explained it clearly. So the amount deducted shall be paid to the central government within 10 days after the end of the month in which such TDS has been deducted. So now the government agencies, the DDOs who are deducting TDS, there is a time limit by which they are supposed to submit it with the GST department. It is the 10th of the subsequent month. So they will deduct for the contract and deduct it. Suppose it is deducted in the month of October, so it should be deposited by 10th November 2020. And how it is? The payment shall be made by debiting the electronic cash ledger and crediting the electronic tax liability register. So how this entries are being passed, that the payment shall be made by, whenever the government is depositing, there will be a clear understanding that this deposit is on account of transaction happened with so and so registered dealer, their GST number will be shared. So when the payment is made by the government, the cash ledger is get यहाँ पे तो उसका क्रेडिट होगा. द पेमेंट शैल बी मेड बाय डेबिटिंग द, ये गवर्नमेंट का बता रहा है. सो सॉरी, दे आर टेलिंग द गवर्नमेंट हु इज मेकिंग द पेमेंट, it will be paid by debiting the electronic credit ledger and crediting the electronic tax liability register. The person who is making the payment, the deductor. They are talking about the deductor. Hope no confusion is there. Hope it is clear. Okay, it is the deductor's electronic cash ledger is debited and liability ledger is credited. So, as per Rule 66, the deductor shall furnish a TDS certificate in the form of GSTR 7A to the deductee, mentioning therein the following. So, like a TDS certificate is issued under income tax, similarly under GST also a TDS certificate is issued in form number GSTR 7A. What all details it should carry? It should carry the contract value, the rate of deduction, because contract value is going to verify that yes, it is eligible for deduction of TDS or not. So tax value is an important information, rate of TDS, amount deducted, amount paid to the appropriate government, any other particular as may be prescribed that is relevant related to the deduction of the amount will be given in that form GSTR 7A. Okay. Now, when this certificate is to be furnished, first is the amount deducted needs to be deposited. For the amount deducted, a certificate is required to be deposited by the deductor. Then there is a time limit by when this certificate should be issued by the deductor. It should be issued within 5 days of remittance as mentioned above. Means remittance means once it deposited with the department, the TDS, then after depositing within 5 days, it should be certificate should be issued. If this certificate is not furnished by the deductor, then there is a liability of late fees of INR 100 per day from the sixth day until such certificate has been furnished. Maximum fee limit is 5,000. Everywhere you will see the limit is 5,000. Now, non-remittance by the deductor, if the TDS has not been deposited, then he is liable to pay penal interest under section 50 in addition to the amount of tax deducted. Say if the TDS is not deposited by the 10th of the next month, the due date of deposit was 10, then they are liable to pay the penal interest under section 50 in addition to the amount deducted. Now the this is the amount of tax deducted reflected in the electronic cash ledger of deductee in the return in form of GSTR 7 filed and shall be claimed as credit. Hope this point is clear. Like once it is deducted, it is reflected into the electronic cash ledger that is available for input tax credit. Okay, hope it is clear. Now, refund on excess collection. Similarly, if any amount has been deducted in excess, there is a provision of refund, and that refund is being made by the deductor. So, however, if the amount deducted has been credited to the electronic cash ledger of the deductee, the deductor cannot claim the refund. Okay, if any that excess deducted amount is already reflected into the account, into the cash ledger, electronic cash ledger on the portal of the deductee, then there is no need to apply for the refund. They can directly claim the credit of that excess amount to, against their outward or output liability of GST. Hope it is clear. Till now, is there any confusion?
No, ma'am.
Okay. So this 10th point already we have gone through the various services that are covered under the normally the government agencies take. So they have just covered the exempted provision or like that. So we'll just go through various examples, various scenarios given under point number 11, from where you get a clear understanding when to deduct TDS or when to not. So I'm just moving to point number A. This is all what written is we have discussed couple number of times. Okay. So just go through point number A. Or shall I read? They are just taking a various scenarios. Point number A states that the total value of taxable supply is greater than 2.5 lakh under a single contract. This value shall exclude taxes and cess leviable under GST. So, with an example, in case the value of one contract for printing material is 3 lakhs plus GST. So, what is the value of the supply? It is 3 lakh. On 3 lakh, GST is charged. What is the type of supply? It is the printed material. And the same is received white 6 invoices. Okay, so for the purpose of deducting TDS, what we have to see, we have to see the value of the contract, irrespective of the fact whether one invoice is raised for a contract or there are multiple invoices, more than one invoice is raised. If the value of the contract is more than 2.5 lakh, the recipient of that supply eligible under section 1 recipient DDO, that is DDO, is liable to deduct the TDS. So in this example, 6 invoices of 50,000 raised in 1890 and 1920. TDS is deducted. TDS is required to be deducted on each bill as and when. So TDS means tax deduction at source. Checkpoint is the contract value, but the deduction of TDS is as and when the invoice is raised, we will deduct the TDS. In case the value of 6 contracts, for now they have just reversed the situation. Second example is, in case the value of 6 contracts, now in this case they have made the 6 contracts, each of 50,000 plus GST, and the same is received by 6 invoices of 50,000 plus taxes. TDS is not required to be deducted on any bill because each contract is valuing less than 2,50,000. Hope it is clear.
Yes.
Okay. Okay. So just go through the point number B. Just give a quick reading. They're just covering the various scenarios. Please give a reading. So B point is clear, like they are talking about the taxable supply and exempted supply. So what is the checkpoint? We have to simply see the what is the item that is supplied, whether it is taxable or exempted as per GST. If it is exempted, the deductor is not liable to deduct the TDS, the recipient of services, you can say. If it is a taxable supply and the contract value is greater than 2.5 lakhs, then on that 2.5 lakhs, on that contract, whenever the invoice is generated, TDS is deducted. So in this case, example, in case of value of one contract for printing material and books from the vendor of 3,50,000 plus GST, say value of this, the books in this entire contract of 3,50,000 is 1 lakh and the printing material is 2,50,000. So TDS is not required to be deducted on the value of contract of taxable goods as it is not exceeding 2,50,000. Hope it is clear. See, the total contract was of 3,50,000. Out of that, exempted item is valuing 1 lakh. The taxable one is 2,50,000. Since the contract value is equal to 2,50,000, no TDS is deducted. In second example, they have just taken they have increased the contract value to 4 lakh. Again, limited the exempted item to 1 lakh. This time, the printing material is valuing at 3 lakhs. So now, to the extent of the printing material, which is a taxable good, the TDS will be deducted for 3 lakhs of value of the contract. Hope it is clear. Others also
Yes.
please confirm. Am I audible to others? Is there any question till now? Please confirm.
Yes, audible, ma'am.
Okay, and is it Harshita? Hope till now the cases are clear to when to deduct TDS or not.
Yes, ma'am, all clear.
Okay. Now they are talking about the location. As we have studied, location is also one of the constraint. So if they are in the within the same like where the location of the supply and the place of supply are same within the same state, that is it is intrastate, then TDS is deducted at the rate of 1% each CGST and GST. That means when this TDS is deducted on account of 1% CGST and 1% SGST, when the supplier of the service is going to take the credit of this TDS, so accordingly he will take 1% under CGST and 1% under SGST, and accordingly they will take the input tax credit. So they have just given A of West Bengal from B of West Bengal, so they it is intrastate. So 3 lakh is the value of supply of services or goods. 1% of CGST will amount to 3,000, and similarly 1% of SGST will amount to 3,000 of the contract value of 3 lakh. Okay, as of now I'm just leaving this example of this IGST. I'm just leaving this example of IGST. Okay, because it is interstate and they have deducted the TDS. Let me just, I'll cover this in the next class, this example. Okay, when TDS is deducted on account of IGST. Okay, so now moving to point number E. When advance is paid to a supplier on or after 1/10/2018 to the supplier for supply of taxable goods or services. Now they are talking, as we have just studied above, that you have studied na what is the date of deduction, like whether the payment is received in advance or payment is received later. Okay, that was in the case of application for the refund. Okay, now example is, in case contract is of 3 lakh plus GST is made on 30th September, but neither supply of goods nor payment is made on that date. 30th September you entered into the contract, but on that date neither the payment is made or the supply is made. Thereafter the advance is made on 1st October of 10,000 plus GST. Herein, TDS will be deducted on the advance of 10,000 made on 1st October 2018. So, what they are trying to explain in this point, this TDS provision or section 51 became applicable from 1st October 2018. That is why they are just giving this example, that if a transaction happened on 30th September 2018 of 3 lakh, even uh, they are like confirming all the provisions applicable for TDS, but the law was not there as on 30th September. And there was a further supply of 10,000 plus GST as on 1st October, then TDS will be deducted on the advance of 10,000 made on 1st October 2000. Okay, so when the contract value is revised, so if it is revised, like earlier it was 2 or 2.5 lakh and later on it is revised, then on the entire contract value, we will not see that, okay, till the it was 2 lakh, it was exempted. So when the value revised to 6 lakh, we will not pay on 2, the TDS is not deducted on 2 lakh. No, on the entire contract value, the revised value, the TDS will be deducted. Okay. So guidelines for deduction and deposit of TDS by the DDO under GST. This again we have just gone that okay. So apart from the provisions given or read, uh, there are the certain guidelines, the way the DDOs can deduct the TDS and deposit also. They have just given the two options to the DDOs to deduct and deposit the TDS. Now what are the two options is, that is individual bill wise deduction and its deposit. Say suppose there is a contract of 6 lakh, that contract is going to get complete over a period of 12 months or maybe beyond a period of 12 months. So it is not that the contract is going to end say after 15 months time and the invoice will be raised after 15 months. What all part is being done, the invoice are being raised by the supplier. So first option covers as and when the bill is raised, the DDO can deduct on the basis of the individual bill. And if say certain bills are raised in October, so by 10th of November the TDS will be deducted and deposited. If few bills are raised in the month of November, then by the 10th of the next December that TDS will be deposited with the appropriate authorities. So it can, this is the individual bill wise deduction and it's deposited by the government. Now then is the second point is bunching of deductions and it's deposited by DDO. That means you just collect few invoices, create a bunch of that, deduct the TDS and collectively deposit that TDS with the department. Now again, the DDO has to file GSTR 7 by 10th of the next month and must generate TDS certificate by the in the form GSTR 7A, and this needs to be generated within 5 days of the remittance. So what is the process flow for these two options that are described in the law is given over here. What process the DDOs are required to follow if they go with option 1 or with option. Okay, we'll just give a quick understanding or reading to this. In this option, अभी time है. So in this option, DTO will have to deduct as well as deposit the GST bill wise individually, as we have just discussed, by generating a CPIN challan and mentioning it in the bill itself. The challans are again generated from the portal itself. They are just giving the details of the invoice and deducting the TDS, and they will deposit it with the department. Now, definitely, DDO shall prepare the bill based on the expenditure sanction. The expenditure sanction shall contain the total amount, net amount payable to the contractor, supplier, vendor, and see the 2% TDS amount of GST. So what they will do, the law is stating that yes, the bill will be raised like in RCM case. The bills are being raised by the recipient of services. So in this case also, the bill is being raised by the department because they know the contract value, that yes, in the government departments the expenditure is sanctioned. If the bill is within that limit, they will raise the bill, and that bill will contain the amount of services and the applicable GST and the 2% TDS that is deducted by the deductor, the DDOs. So now the DDO shall log in into GSTN portal using this GSTN, means they are also having the GSTN numbers, and generates the challan, and in this challan they will fill the desired information related to the payment, and in one of the head it can be either CGST, SGST, UTGST or IGST, and they make the payment. Means they have to just select. Have you ever gone through the GST portals? Have you ever seen the GST portal? Any of
Yes,
you?
ma'am.
Okay. So then you can just see, like whenever we are making the payment, there are forms prescribed for making the payment. The challan is automatically generated on clicking the challan buttons, and you have to just mention the details under the applicable head and just go with the pay button. Challan is generated. Using that challan, you make the payments. Okay, while generating the CPIN number, the DDO will have the select the mode of payment, whether it is the NEFT. Are you going to make this payment through NEFT, RTGS, or over the counter mode? In the over the counter mode, they have to select the bank and make the payment. Will be deposited through over the counter. That means they will take the challan print and they will get to the counter of the authorized bank, and that from there they will make the payment. The DDO shall prepare the bill on PFMS in case of the Central Civil Ministry of Gaul. Similarly, payment portals of other ministries, department of Government of India, you can say GOI hai, Government of India, or of state governments for submission to the respective payment authorities. Similarly, like they are saying that if it is PSU to PSU, the bills are being raised and accordingly the entire process is being followed. PSU to PSU is exempted, so no DTS will be deduction. So in the bill, on the face of the bill, what it is stated, you will get the material item value plus the rate, GST applicable, and the amount of the TDS deducted will be stated on the face of the bill itself. So in case of the NEFT and RTGS mode, the DDO will have to mention the CPIN number. That is, yes, the challan number is required to be mentioned to correlate, to reconcile the things, as beneficiaries account number and RBI as beneficiary, and IFSC code of RBI with the request to payment authorities to make payment in favor of RBI with these credentials. Yes, because in case of RTGS and transaction routes through RBIs, so that is why these such details are required for making the payments. So that means in this likewise, basis the bill, the GSTR 7 is returned, and the filing of GSTR 7 can be on monthly basis. And there are offline utilities available on the portal to fill the form GSTR 7. So you can just download the offline utility. You can fill it offline, that is not on the portal, just offline, and those offline utilities can be uploaded on the portals. And the DDO shall generate the TDS certificate through the GSTR portal, that is form 7A, and after filing the monthly returns. So once in a month they generate the GSTR 7, and then the GSTR once the GSTR 7 is raised, then within 5 days they have to raise the certificate in the form GSTR 7A, and it should be given to the deductee. This is how like option 1 uh, is dealt at the portal. Okay, so now in case of option 2 see, when there are large number of invoices that are liable to be payment in a month, then they are required to make the large number of challans, because every time you are generating in challans for small invoice, and every time you are making the payment, it becomes a cumbersome process, and you need a one resource, one person to make all these release all these payments. So what they do, they collect all the invoices for which payment is required to be made in the month, and then they select this option number 2, and while exercising this option, they will have to deduct the TDS from each bill for keeping it under the suspense head. However, deposit of this bunched amount from the suspense head can be made on a weekly, monthly, or any other periodic basis. That means for every bill, whatever they are deducting, that deducted amount will appear in the suspense head in the books, and once whatever period as an internal policy decided by the department, they can deposit it on weekly, monthly, or any periodic basis. Okay, so process is more or less the same. If you see the point number A, then point number B, 2, 3, every point is same. So far, the challans are generated, payments are made using NEFT and RTGS. You can just have a reading of this. Again, the form number 7 is the return is being filed in form number 7 on monthly basis, and again a certificate of TDS is being raised in the form of 7A through portal. Authorities under Ministry of Defense, again they are just explaining that Department of Post Audit is exempted under for the TDS provisions. Hope with this part of TDS is clear. They are just repeating again and again what we have discussed. Okay, so student, shall we start the TCS in the next class? It is again a 2-3 pages thing, and then we will just start.
Okay,
Again, they are
ma'am.
just going to explain the same process and the norms related to the TDS, and we will start along with that the returns under GST in the next class.